Hi, my name is Sally Gimmon, and I'm the owner of the TrustIsYou.com and a podcast called Stop Paying Capital Gains. I want to teach people how they can save as much money as on your federal taxes. Most people have never heard of the Spendthrift Trust, so I want to teach you a little bit about more of this. There are 4 different trusts, so I'm going to talk to you about that. Now, the Spendthrift Trust is legal, patented, and the IRS Tax Code 643B, like Bravo. If you don't realize this, the U.S. Tax Code was put into effect in 1913. It was supposed to be in effect for 6 years while we got ready to go into World War I and when we came out of World War I. It was supposed to go away. Temporary tax code. So back with the barons back then, the people like the Rockefellers, the DuPonts, and the Carnegies purposely put the tax code into the U.S. Tax Code 643B, like Bravo. My background, my undergraduate degree was English literature. I love to read. Here's a weird fact. Think of all Shakespeare's work, Romeo and Juliet, As You Like It, Midsummer Night's Dream, King Henry III. Put all of Shakespeare's works together, and the U.S. tax code is 10 times the size of Shakespeare's work. Shakespeare is a whole lot more interesting to read than the tax code. So a lot of CPAs, financial planners, and other people have never heard of this trust. If you have someone telling you I'm lying, I have 2 pages of case law and a book I'm going to recommend. It's called Scott and Asher on Trust, 5th edition. It is a textbook that trust attorneys study in law school. Only 3% of all attorneys are trust attorneys, and this is a specialized trust. I found out about the trust because in my real estate group, there is a gentleman named Garrett Gunderson who wrote a book called What the Rockefellers Do. He changed the title. It's now called What the Billionaires Do, but I have a copy of the old book. What the Rockefellers Do. The Rockefellers Trust is 7 generations old and has almost 400 people under the same EIN. EIN is Employee Identification Number, is your tax number, just like your LLC that you do all your business under. Now, the Rockefellers have 27 different people CPAs who work with them. I'm sorry I don't bring anybody on live because the last time I did that, the person was naked. I do a live on Monday nights, 8 p.m. East Coast time, and I will be doing a live presentation September 12th at 4 p.m. East Coast time. I'm in Charlotte area, so that's why everything's East Coast for me. Now, with the full name for the trust is Irrevocable, Complex, Discretionary, Non-Grantor Spendthrift Trust. Irrevocable. Generation after generation after generation. The majority of trusts out there are what's called a family trust. It's started by the same person, and when that person passes away, you avoid probate, but then it dissolves. My mom and dad had that. That's what Susie Orman talks about on TV. This is not your mom and dad's trust. So that's irrevocable, complex. This trust can hold money from day to day, week to week, month to month, year to year, decade to decade. You don't have to disperse everything like I had to do with my parents' trust. Discretionary. Whoever is a trustee or trustees can make the rules for all the beneficiaries. I am the trustee for my family for my family. I have made no rules like that, but I could if I wanted to. And then non-grantor. This makes the trust 100% private. The majority of trusts are grantor. This person who starts it is a person who has the trust. This is somebody who is not a beneficiary who signs up for the trust, then signs away from the trust, and you will need their social security number. This is not difficult. Worst case scenario, if you don't have anyone you want to talk to, either myself or another representative from the law firm can do this for you. It's an easy thing to do. And then the spendthrift. This is in the IRS Tax Code 643B. It's been in front of the U.S. Supreme Court twice. Both times the Supreme Court has favored with the Spendthrift Trust. It's as legal can be. Now, with all the trusts, you're going to do the 3 very important things. Number 1, you're going to save federal taxes. Who doesn't want to save federal taxes? I'll explain the differences between the trusts in a minute. Number 2, you're going to keep your information 100% private. I don't know where the rumor started that your LLC, S Corp, or C Corp keeps your information private. It does not. I can do a Freedom of Information Act and apply to the Secretary of State or the Corporation Commission and get all the information from there. This trust, no one's going to know what you own or how much you own or what you did with it. And then the third most important part, you're not going to pay any judgments if you get sued. I can't stop you from being sued, but you won't pay any judgments for that. I can save you thousands and thousands of dollars. Now, the first trust we're going to talk about is the business trust. This is for 1099 income earners in the United States. I don't care what you're doing. You might be a one of my clients that has 2 pizzerias. He's going to save over $21,000 every single year in 1099 income. I can legally say you're going to save at least 70% of your federal taxes year after year, generation after generation. Most of my clients are saving more than that, but I can legally say 70%. So Roberto, he's from Long Island. He has a pizzeria here in the Charlotte area. He's saving over $21,000 every single year with the Spendthrift Trust. In 2025, he's going to open a 3rd location. In 2026, he's going to open a 4th location. When he retires in 2033, he's going to leave the pizzerias 1 to 1 child, 2 to 1 child, and 2 to another child, and they won't pay any inheritance tax. They too will save 1099 income generation after generation after generation. Major, major important thing. Another situation I'm dealing with right now, if you are a real estate agent, you will save at least 70% on all your taxes. I just posted something today about a real estate deal we did where she's saving so much money doing that. The business trust, 1099 income earners. Easy peasy, that's all it is. The beneficial trust is for investors. I don't care if you're a passive investor, a real estate investor, a crypto miner, you're involved in the stock market, you're a day trader, you're a forex trader, you have royalties, you're going to save the following taxes year after year, generation after generation. You're not going to pay short-term or long-term capital gains. Hence the title of my podcast, Stop Paying Capital Gains Now. I paid too much in capital gains. You're going to stop paying interest income. If you are doing the BRRRR strategy, I have 12 notes. That's interest income. If you are a passive investor, if you're doing creative financing, if you're doing seller financing, that's interest income. You'll no longer pay that. Dividend income. If you have dividend stocks, if you're in the stock market, you're no longer going to pay that. If you're an options trader, listen up, people. If you're an options trader, you're going to pay 40% on your profits for a year or less. And 60% on a year or more. Yikes. You only keep 40% of your profits. You'll save that with the beneficial Spendthrift Trust. If rental income, you could have Airbnb. You could have traveling nurses. You could have students. You could have 10 doors, 20 doors. You could be in multifamily. You can still take depreciation, but you're going to save the federal taxes on rental income. And going back to paying no judgments, true story. One of my clients, before he became a client, one of his renter's dogs got loose, bit the mailman. The mailman went and got a lawyer. The lawyer found 4 of his houses. He had 100 doors in Chicago. He found 4 of his houses, and the mailman got paid $400,000. Now if that happens, the mailman has no place to go because everything's private. So rental income. Royalties. Royalties could be if you're an author, a songwriter, a musician, a screenplay writer. If you have mineral rights. One of my clients inherited his granddad's horse farm in Oklahoma. He has 6 oil wells on that house, on that property. Me selling the trust, it's a royalty. I don't pay any royalty taxes. Now, that's going to be the beneficial trust. Business trust, 1099 income. The beneficial trust, all investors. Any investors in the United States. If you are a foreign national, I do have a client, he's Saudi Arabian, he has property in the United States. I can save him the property in the United States. I can't help him in London, I can't help him in Saudi Arabia, I can't help him in Canada, but in the United States. Now, the third trust we're going to talk about is for if you have a nonprofit thing. You can get all sorts of grants for that. So that's the third one. And then the fourth one is for senior citizens who are over 65. What's going to happen every October? So this coming October 2023, they're going to do go and check the 1040 tax returns for 2021. If you made more than $91,000 in 2021, you're going to have to pay more for IRMA. IRMA, I'm trying to find my right page, so give me 1 second because I took out my thing. IRMA is income-related monthly adjustable amount. This affects your Part B of your Social Security. Part A is your hospital stays. Part B are your doctors and your tests. If you made more than $91,000, you'll have to pay more for Part B or start paying the federal government for that. So with the senior trust, I'm going to be honest, it's a blind trust, so the senior has somebody who's in charge of it, but it will save them from paying IRMA. Most of my seniors prefer to have just the regular, either the business trust or the beneficial trust. But when they're looking at things, they're looking at your pension, your Social Security, your 401k withdrawals, your SEP withdrawals, your wages, your capital gains, your interest income, your dividend income, your rental income, and your royalties. So again, there's some seniors out there who are making too much money. Most seniors, I was a Medicare broker, when I became a real estate investor, they're broke. But again, that's going to be the senior trust. My goal is to help people save as much money on their federal taxes as they can. My first time I did this was I bought a contract in July of 2020 for a bank-owned reverse mortgage. The whole deal was it was going to be, I paid $20,000 for it. It was going to go to auction for $50,000. Yay, Sally. I'm going to make $30,000 in the spread. Again, remember, July of 2020 is the middle of COVID. I had to wait 13 months, so I got time to research this because I was doing this all the time. I was making great money doing bank-owned properties. So I found out about the trust. I started it in September of 2020. I had to do 2 simple bills of sales. I Googled it. Literally, I Googled it. One bill of sale said from my LLC to me, Sally Gimmon. Second bill of sale said from Sally Gimmon to the trust. I went to the bank. I got them notarized. I did $10 to the banker. Then they handed me back the $10. Went home, scanned it, sent it to the attorney in Raleigh, North Carolina. At the time, I was living in Phoenix. So, 2,000 miles away. Next day, the attorney in Raleigh says, hey, I need the first page of your trust. Scan that, sent it to him. So this was, I bought it in July. I started the trust in September. It didn't go to auction until August 28th of 2021. At that time, it started at $50,000. It went up to over $64,000. My tax rate, there are 7 different layers of tax rates and 4 different ways to file. My tax rate was 24%. I saved over $10,580 on that first transaction. Yay, Sally. Easy peasy. I'm not trying to crow, but I'm a real estate investor. I have 12 notes, which is interest income. I have a crypto bot that pays me. I stake crypto. I have 3 businesses I run. One's a nonprofit charity. That's Learn with Sally Marie. But I have other businesses. So far in 3 years, because today's September 1st, I started my trust 3 years ago, I have saved over $177,000 in federal taxes. Yay, Sally. That's a lot of money. If you would like to have a conversation with me to learn more about this, please go out to thetrustisyou.com and set up an appointment with me. Because this trust is a contract. It comes from England way back when King Henry VIII got in trouble for chopping off his wives' heads. He started the Church of England. Go figure. Chop off someone's head and start a church. Why not? He went to go tax the lords and ladies. They went further back into history than Magna Carta and its contract law. This has come from England to the United States while we were still a colony. This year, in 2023, the law firm I work on behalf of has a trust that's turning 350 years old, even before we were the country. Worst case scenario, if Congress changes the tax rules, they can't break the contract. So as long as you have the trust, they can't break it. If they change the rules for IRS, I won't be able to sell the trust anymore. I'll just be a real estate investor and a crypto investor. Please reach out to me. Set an appointment with me. The 30 minutes, we'll do a tax review. You'll have to tell me what your tax bracket is and how you file. There's 7 different layers, between 10% to 37%, 7 different layers, except for royalties. That's 10% to 35%, 7 different layers, and 4 different ways to file your taxes. We'll have a conversation. We'll talk about things. If you want to get the trust started, I'm here to help you. Again, my name is Sally Gimmon. My website, thetrustisyou.com, and then my podcast is Stop Paying Capital Gains. I hope you all have a beautiful Labor Day weekend. I will go live on Monday, even though it's a holiday. I do it all the time. Have a beautiful Friday night. Bye-bye.